Hey everyone, and welcome back to the channel. Are you curious about cryptocurrency but not sure where to start? Wondering how people actually trade Bitcoin, Ethereum, and other digital assets? In this video, we'll walk you through crypto trading for beginners, from what crypto is to how to place your first trade safely. Today, we're unlocking the often intimidating world of cryptocurrency trading. If you're a beginner looking to understand the basics, identify opportunities, and most importantly, trade safely, then you've come to the right place. This is your ultimate guide to crypto trading for beginners. The crypto market has exploded in popularity, and the idea of trading digital assets can be incredibly exciting. But let's be honest, for newcomers, it can also feel overwhelming, risky, and full of jargon. My goal today is to demystify crypto trading, give you a solid foundation, and help you avoid common pitfalls. Before we begin, this video is for educational purposes only and is not financial advice. Cryptocurrency trading is highly volatile and carries significant risk. You could lose all your invested capital. Only trade with money you can afford to lose. Alright, let's break down the essentials. Part 1. Understanding the basics of crypto trading. Cryptocurrencies are digital currencies secured by cryptography. Unlike traditional money, they are decentralized, meaning no single entity controls them. Popular examples include Bitcoin, BTC, Ethereum, ETH, and Solana, SOL. These assets are stored and transferred on blockchains, which are digital ledgers spread across multiple computers. At its core, crypto trading is simply buying and selling cryptocurrencies on an exchange with the aim of making a profit. You're trying to buy low and sell high. Unlike traditional investing where you might hold assets for years, trading often involves shorter time frames, looking to capitalize on price fluctuations. Let's quickly define some terms you'll hear constantly. Exchange, a platform where you buy, sell, and trade cryptocurrencies. Binance, Coinbase, Bybit, Kraken, and OKX. Pair, cryptocurrencies are traded in pairs. BTC/USDT. This means you're exchanging one for the other. Fiat, traditional government-issued currency, like AED, USD, Euro. Volatile, prices can change dramatically and rapidly. This is a defining characteristic of crypto. Bull market, prices are generally going up. Bear market, prices are generally going down. HODL, a popular crypto term meaning, hold on for dear life. It refers to holding your assets through market fluctuations. Part 2, setting up your trading foundation. Step 1, choose a reputable exchange. This is your first and most crucial step. Your exchange is where all the action happens. Look for security, strong security measures like 2FA, two-factor authentication, cold storage for funds, and a good track record. Reputation and regulation, choose well-known exchanges with a good reputation. Supported cryptocurrencies, ensure they list the coins you're interested in. Fees, understand their trading, withdrawal, and deposit fees. User interface, is it easy to navigate for beginners? Customer support, accessible and responsive support is vital. Once you've chosen, sign up. You'll need to go through a KYC, Know Your Customer process, which involves verifying your identity with documents like your government-issued ID or passport. This is standard practice for legitimate exchanges. Step 2, fund your account. You'll need to deposit money to start trading. Common methods include bank transfer, often the cheapest but can take time. Credit debit card, usually instant but comes with higher fees. Peer-to-peer, P2P, trading, buying crypto directly from other users, often through the exchange's platform. Always double-check the deposit address and network if you're transferring crypto from another wallet to the exchange. A wrong address means lost funds. Part 3, understanding trading orders. Types of trading orders. This is where you tell the exchange how you want to buy or sell. The two most common are market order. Market order, buy, sell instantly at current price. This is the simplest. You tell the exchange to buy or sell immediately at the best available current market price. Good for speed, but you might not get your exact desired price in a fast-moving market. Limit order, buy, sell at a specific price or better. You set a specific price at which you want to buy or sell. Your order will only execute if the market reaches that price. This gives you more control, but your order might not fill if the price doesn't hit your target. As a beginner, I highly recommend starting with limit orders. They give you more control and prevent you from buying too high or selling too low impulsively. Part 4, Essential Trading Strategies for Beginners. Trading isn't just about guessing. Successful trading needs a strategy. Here are a few basic ones. Hodling. Buy and hold long-term. Day trading, buy and sell on short-term movements. Swing trading, ride trends over a few days or weeks. Scalping, take advantage of small price changes. Dollar cost averaging, invest fixed amount regularly. This is less about trading and more about smart investing. Instead of buying a large amount at once, you invest a fixed amount of money at regular intervals, $100 every week. This averages out your purchase price over time, reducing the risk of buying at a market peak. It's excellent for beginners. Trend following, buy in uptrends, sell in downtrends. Identify if the price is generally moving up, uptrend, or down, downtrend. In an uptrend, you might look to buy on small dips. In a downtrend, you might consider selling or avoiding buying. Don't try to catch falling knives. Support and resistance. Support is a price level where a downtrend is expected to pause due to concentrated demand. Resistance is a price level where an uptrend is expected to pause due to concentrated supply. You can look to buy near support and sell near resistance. This requires looking at price charts. Risk management. This is the most important rule. Only invest what you can afford to lose. Use stop-loss orders. These are limit orders to sell automatically if a crypto's price drops to a certain point. This limits your potential losses. Never go all in on one coin. Diversify your portfolio. Start small, begin with small amounts you're comfortable experimenting with. Part 5, Tools and Resources for Beginners. Don't go into this blind. Leverage these resources. TradingView. An essential charting platform. Even the free version offers powerful tools to analyze price movements, draw support-resistance lines, and identify trends. Learn to use it. CoinMarketCap, CoinGecko. These sites provide comprehensive data on all cryptocurrencies, including prices, market cap, trading volume, and links to official project websites. Crucial for research. Reputable crypto news sites. Stay informed about market news, regulatory updates, and project developments. CoinDesk, Cointelegraph, The Block. YouTube channels, like this one. Follow experienced traders and educators who provide valuable insights and analysis. But always verify information. Part 6, Common Beginner Mistakes to Avoid. Avoid these mistakes. Learning from others' mistakes is cheaper than making your own. Chasing pumps, FOMO, buying a coin just because its price is skyrocketing. You'll often buy at the top right before it crashes. Trading with emotions, fear and greed are your worst enemies. Stick to your plan. Over-leveraging, using borrowed money, leverage, to amplify trades. This can lead to massive losses very quickly. As a beginner, avoid leverage entirely. Not using stop-loss orders, letting losses run unchecked. Ignoring research, investing in a coin just because someone on social media told you to. Always do your own research. Trading too much, overtrading can lead to exhaustion and poor decisions. Sometimes, the best trade is no trade. Conclusion. Crypto trading can be an exciting journey, but it requires patience, continuous learning, and strict risk management. Start small, focus on understanding the market, and never stop educating yourself. The most successful traders are often the ones who are disciplined and adapt to changing market conditions. Start small, learn constantly, manage risk. What are your biggest questions about crypto trading for beginners? Let me know in the comments below. I'll do my best to answer. If you found this guide helpful, please smash that like button, subscribe to the channel for more crypto insights, and hit the notification bell so you don't miss out on our next video.